Well, good afternoon, everybody. I know that some of you guys have been here, and ladies, of course, have been here for a few hours. So I'm going to not tell you how awesome I am or how impressive my returns are, but I'm going to show you a trade that I love to watch for every single day, and hopefully that helps you in these short 45 minutes to get some stuff in your plan that might look like this and help you get in front of good opportunity. So we'll dive right in. Of course, as with every trading presentation, there's always a disclaimer. You may read that on your own there. Of course, don't risk money you don't have. And with this, and a lot of the other things that we teach at Fierce Trading, we always tell people, these are great things and they can make you significant amounts of money, but there's also exposure to loss, so you make sure that you cover yourself that way. At Fierce Trading, we often talk about having an if-then plan. If something happens, then you can look for a setup, or if something happens, then you can look for an entry. So today I'm going to talk about one of those ifs that I look for every single day, and we might even talk about a couple of then. If this happens, this is a couple of different ways you can get in. It's tough to get into a million different ways to get into a stock, but knowing what to look for that presents a high probability trade is going to be really awesome. And we're going to look at the rip and dip today, and let's dive right in. So in short, we're looking for rips and dips provide this short-term shock value, and we're really just looking for a moment in time where the trade has an exhaustive move that runs into significant supplier demand. And so at the beginning of this course, of this 45 minutes, I'm going to give you kind of the rules of what a rip and dip trade might look like. And then I'm going to show you a bunch of charts, because I'm thinking that the charts are going to give you a clear understanding of what it looks like. All right, so if you need to go back and watch the video, I believe Renee is going to send a video out of this thing, so you'll be able to go back to the rules. I'm going to try to kind of go through the rules kind of quickly. They should make sense, but if we're moving too fast, it's because we're all under this time restriction. These rips or dips that you watch in the market, cascades, whatever you want to call them, they usually cause an imbalance in price, and it causes amateurs to behave irrationally. All right, and oftentimes as the pros, we have the benefit of having the amateurs around, because as they act irrationally and run for the doors, that's where the pros often step in and make their profits and consistent income. And so as they act irrationally, we get to step in front of really great opportunities. All right, and these type of events create a reward that's bigger than the usual setup, the usual pullback setup or whatever. And I'll show you why. We like to call these things voids on the chart. They leave these big voids on the chart where there are no failed buy or sell setups. And so I'll show you what those things look like. All right. Of course, we always predetermine risk regardless of what type of setup you're looking for. Right? So here are some of the requirements that we look for this rip and dip. We always want to have some sort of 2-to-1 when you're talking about risk to reward on the time frame you take the trade, right? So if there is a pivot that's too close, I'll show you what to look for, and you might want to not take that. But these oftentimes leave such a nice void that you'll see them run right up. We'd like to trade these things around these reversal times, and I don't know how many people in the industry talk about those things, but we have found as we trade together every day that around these 10, 10:30, and 11:30 times in the morning, the markets will at least pull back, give and take a few minutes on either side of that, if not reverse, and give a really nice opportunity at almost a systematic time, right? So 10, 10:30, and 11:30. So when these rips and dips happen around those times, pretty close to those times, we prefer to have that. All right. We want to see exhaustive moves with multi-candles on the smaller time frame, and I'll show you what that looks like. And of course, when I have large volume that occurs at prior demand on the big time frame, because volume is activity, and if you see activity stepping in, the people that can create massive volume in the market are often the pros because of the size of their accounts and institution buying, whatever, that oftentimes retail traders can't do on higher price stocks. And then we want to see 2 or more down or up days depending on which way you're taking the trade, whether you're taking it long or you're taking it short. 2 or more up or down days into support or resistance. Again, this is going to become very, very clear as soon as you see the charts, right? So we're looking for these exhaustive moves with multiple candles in the same directions into an area of support resistance, and we'll show you what that kind of looks like. And of course, we're looking for today's candle, today's daily candle, right, to be at least its average true range. That's what ATR stands for. When we talk about ATR, we talk about ATR quite a bit in our trading room, in our trading community, because I feel that it kind of shows the speed of the market. The market is going about X, right? So if now on today we're at 2X or 3X, something's not right. If we're used to moving, let's say 75 cents a day, and today's candle is already $2.50, there's a very good chance that we're not going to be moving in that same direction for much longer. There's at least going to be some sort of pullback, and if you have all these other rules in place, you can participate in that pullback. All right, so that's one of the things that we include as a requirement. We want to make sure that today's candles already moved more than its average true range. All right. Here are a couple of things that you'll want to avoid, things that you don't want to see, right? You don't want today's candle to be the first up or down candle when you're looking for this setup. And I'll show you what I mean by first day. A good example today might have been something like BBY, and maybe we'll go to the live charts at the end when we answer some questions, but that is classified as a day one, up day or whatever. So you want to see a couple of different things when it's the first day. So we prefer day 2, 3, or more, right? So avoid day 1 type things on this type of setup. Stock that is basing near or high to low, oftentimes those bases, for example, if it's on the chart that looks like this, something like that, it's trending up, and then it starts doing this little base, right? This is not ideal, right? This is not, because this is a time for pause, right? It's almost like the market is resetting, so it's not really ripping or dipping, so you want to avoid those types of looks. All right, and you want to avoid trading into resistance or prior supply with the Qs, right? So let's say the market is at resistance, right? So let's say the market is running up into some resistance right here. Right. And you've got this thing, your stock that you're looking to potentially buy because it's dipping. I'll show you, maybe increasing volume right here, even a pretty decent area to the left, which is part of the requirements. However, the market is likely going to pull back as soon as you trigger. This is something you want to avoid, and here's why. You want the market to kind of blow wind into your sails, right? And so if the market is going to be pulling down and this thing has been weak today, the likelihood of this thing ripping very hard is lower. So you want something where the market is also maybe pulling down a bit and about to give a pullback. That will give this much more validity. All right, does that make sense? So we'll talk about what that looks like on the charts. Another thing to avoid, a stock price that is not coming into a 60-minute demand area or supply area. We like really fresh price action on these things. And fresh price action is going to come from those 60-minute charts. I mean, certainly I take these trades, if the daily chart is coming to a really nice place, or even a weekly chart is coming to a really nice place of supply or demand. But when I can get those locations in addition to a 60-minute chart, which is a more immediate and fresher price action, I really enjoy that. So avoid the ones that don't have the 60-minute chart in your favor as well. All right. See, here's some bonus features. So some things that will make the trade even more high probability, or the types of things that I like to see, and give me a better sense of the trade. So when a stock will break some major support on a daily or weekly chart, that's usually when the amateurs will start running for the hills, right? It's like, oh my gosh, we broke support, everything is over, the world's coming to an end. And so when you see those irrational reactions from the amateurs, usually that's when the pros step in. So remember that when amateurs are running, the pros are usually stepping in and going, oh, thank you for the cheaper prices or whatever. Thank you for the value that I'm able to buy or sell this thing at because you acted irrationally or because you didn't honor your stops or whatever, right? So if it breaks, let's say this is a weekly chart, and there's some really significant level here, and it just barely dips below it, you'll see a bunch of irrational acting based on, maybe a couple of pennies below weekly pivot. Remember, the volatility might take, if we're coming into support because the volatility is high, we might dip just enough below it and reverse pretty sharply, but all the amateurs will be completely stomped out here where, if this was a significant weekly area and it's been bought here before, even if we dip down a little bit below that, it's very likely that whoever bought here with significant buying that made it move this much is going to step in again in a similar area. And remember, if you can take anything away from today's session, is that support and resistance should never be drawn on your chart like this. And unfortunately, the old tire teaching in this space of stock market, trading or technical analysis, everybody drops a line on their chart and they'll look at the number. They'll be like, okay, it's $92.22, and they'll be like, that's support. If it breaks that, then it's over. It's not support anymore. It's like, no. That's not how it works. In fact, the way we teach it with our people is it's more like this. That's a line, a zone of support resistance. I don't even have numbers oftentimes on something that, what we consider a zone, because that zone may be 15 cents, maybe 50 cents, maybe $1, depending on how big the stock is, right? So you have to get a sense of, okay, we're coming into a weekly area, we're coming into a daily area, an hourly area, whatever. And oftentimes those amateurs will just start doing irrational things because you're, 5 cents below weekly area. So don't, try not to do that. I know it took me a little bit off track, but I think it's so important that people, even if you took that from today's session, you're like, man, I need to start looking at support and resistance as areas instead of just a line with a specific number on it. If you took that away, that in itself should have been the value from the session with me today. But so anyway, for these rips and dips, the bonus feature would be that you have an area of support resistance that gets broken, and so that's where the amateurs freak out, and you can step in with much better understanding of price action. If you can get the Qs and the SPY to also be extended, let's say you've got something that's spiking down, right, something that's spiking down, and also the market, maybe not like this, but the market is also just doing it like a lazy pullback. Remember, we've been in an uptrend for if you look at a bigger time frame, I mean, we've been in an uptrend for years, right? So we've been in the most bullish environment ever. So a lot of these things that we've been trading the most have been these spikes down into support. We've had a few more of those than all the other ones. But as the market pulls in a little bit and this thing is dying, it comes into a really great area. We'll talk about what that looks like. If the market is also coming down in the same direction, and it's about to do a pullback or some sort of reversal or something, that is something I really like to see, because as the market pulls back up, it's going to push this much faster. And I like to be in trades that don't last forever. I don't want to be exposed to risk for longer than I need to be, and I like to have quite a bit of size when I come into the market so that I can start taking profit 20, 30, 40 cents into this thing. I don't want to have to hold for 4 hours if I don't have to. I like to have great areas on my charts where I can look for my if-then plan, and I want to get in and start peeling profits off quickly. We're doing some math just the other day as far as our entries and all that stuff, and we're looking at 80-some%, a little bit over 80% of our entries immediately go in the green, and we're able to trail into the profits quickly or start peeling stuff off the table pretty quickly. Whereas unfortunately, and this might be the case for you, and you get into a trade and immediately you feel like you're underwater a little bit. And that's no good. You don't want to be in that place where you're often underwater the second you come in, because that means you don't have a very laser focused way to get into something. How many people ever feel that way? Maybe you put up a 1 if you feel like you get in, and oftentimes you're immediately in the red before you show some green in your P&L. Let's get some 1s in there. Not anymore. That's good. Yeah, sometimes that happens. There's the response that are coming in. Yeah, and it's tricky because it's kind of defeating, right? You sit there and you watch this trade setup that you learned somewhere, or maybe it's been part of your plan for a long time, and you feel like, man, I see this setup, I am at support or I'm at demand or whatever it is, and you know, I want to be in the profits quicker. I mean, who doesn't? With these laser focused type of setups, I think that you'll find that you'll be in the profits quicker if you're able to be picky and wait for the best areas on the chart, right? Being underwater immediately for me is a sign of poor timing, and you need to address that immediately, because you start making bad decisions even on your trade management if you're often in the red, right? You start trailing too quick because you don't want to lose another trade, or or the trade, if you're used to being in the red on the entry on a regular basis, as soon as the thing is like 10 cents in your favor, you start choking the trade off, or you start pulling profit before you actually meant to. But when your batting average gets so good that you're often in the green immediately, right? Then all of a sudden you're like, man, I can be a little bit more patient. I can give this thing a little bit of breathing room. I know my entries are focused, and I'm in the green very, very quick. So those are the types of things that help. If you can get the cues in the SPY or something to be extended in the same direction, as soon as it starts to rip, and it rips with that. Okay. And then cues and SPY moving in the same directions of the stock upon entry, and not in the opposite direction. So let's say you had that big, whatever, dip down, and then it starts to trigger, but then the cues of the SPY continue to just drop, right? They don't even have a decent buy setup, and this thing continues to drop. The likelihood of this getting much traction if the market is continuing to dip or get some volatility to the downside are very low. And that's when you can potentially start trailing your position a little bit quicker, because you have an eye on this. Now, if you trade but you don't ever keep one of the indices at least, on your multiple time frames or whatever, then you're probably not trading with a full vision, right? You want to make sure that you see what the market is doing as well. If the market is bouncing a bit, maybe giving you some buy setups, the likelihood that your long is going to get some win in its sales is very good. But if you're going long something and you start seeing some volatility to the downside in the markets, and yeah, I'm talking about day trading here specifically, quick trading, a few minutes, an hour or whatever, then you want to make sure that you trail your position. You're not exposing yourself for a full loss. It's just one more way to manage your positions. I wish I had enough time to talk about trade management. I mean, that's probably hours worth of conversation right there. But I feel like most traders do trade management very poorly. They expose themselves to too much risk, or don't really know how to trail appropriately, and therefore are always losing more than they're making. They'll have a, let's talk in dollars. Let's say you have a $200 win or a $250 win, but then your losses are always $400 or $500, depending on what your risk parameters are. So you want to make sure that you don't expose yourself to too much risk. All right. Some requirements here. Today's candle is at least the second consecutive candle if it's a bearish kind of setup, right? You want 2 or more candles into prior support demand. Obviously, the opposite is true if you're going the other direction, right? You're trying to get daily chart that's got 2 or more candles in the same direction. The more bearish candles in that direction, the better for a long, and of course, the more bullish candles in a row. So if you've got a bunch of daily candles like that, then it makes up a much higher probability short. So we'll talk about that on the charts. The hourly requirements. On the hourly requirements, if you can get 3 or more candles, I love those. However, I have sometimes also taken inside the first hour of the day, when you get the really big hourly candle out of the gate, especially if the 2 to 3 days before have been red days as well. This first candle will often be enough to get into an area of significant support. And so, but if you can get multiple, and you can also use yesterday. So if yesterday was like this, maybe a little pullback and closed like that, right? So down, 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 up, down, and then today did that into that area that we like so much, then this is okay too, right? This would count as multiple, all right? Again, like we said before, if it can trade through major support area, it's not bad. It's actually better, because remember that when people start acting irrationally is when you're going to find the best opportunity, right? The bigger the last candle, the bigger the void. We're going to talk about voids here, and voids usually, in short, if you've got a bunch of red candles like this that kind of open at the high, close the low, open at the high, close the low, open at the high. If you have a bunch of those, this would be considered a void, because there is no buy setup in here that failed. When a buy setup fails, it usually becomes an issue on the way back up. So for example, if you have a down candle, buy setup fails, right? If you get a trigger in here, your first really clear place for a profit target and or issues on the way up is going to be in here, because there are people that bought in here that are stuck in the trade, because our understanding of it is most of the time, especially amateur traders, will take this trade and have a quote unquote mental stop, right? And so then they trigger in at the worst, because this wasn't a good location, it fails on them. They don't actually take the stop because they don't want to take a loss. Unfortunately, this happens too often. And then when they actually comes into the great location, you take that trade, now you have to look at this as a potential issue, because as soon as it runs into this area, and I'll show you on the charts, as soon as it runs into this area, these people right here are going to want to liquidate their position. So it's going to push it back down for at least a little pullback, right? So we'll make it clear on the charts here. Here's a short time frame. This is usually, by short time frame, I mean a time frame that's, that's not good. Let me go back to that chart. Here, this is the time frame in which you're going to enter the trade, right? You want 5 or more consecutive bearish candles for a long, or 5 or more bullish candles for a short. And then we talked about this just a second ago. We're extended below a failed buy setup or sell setup. If it's the other way. Again, this will make a lot of sense on the charts. We'll talk about the charts, and we're almost at the charts here. Increased volume as it starts to enter that bigger time frame prior support area. So for example, we got this big rundown, right? And the volume is about this, something like that, maybe a little larger. As we come into that area, you start seeing that spike in volume, oftentimes at the very bottom. And on to the left, you get that big weekly area, hourly area, all kind of lined up and looks awesome. If you get that spike, the volume starts to increase this way. This is people starting to fill, people that have market significance, people that can move the market. This is them stepping in, starting to fill up their warehouse before they start moving the prices up, right? They're not going to buy it so hard all at once that they're not going to have enough to actually make a profit, right? To make a significant profit. So as it starts to come into an area, remember support and resistance being an area. As it starts to come into that area, you'll see the volume spike in here. So they're filling up lower prices. Yay, thank you, thank you, thank you. They're thanking you for the lower prices, and then you'll see that rip back up to the high side, especially if there's no failed buy set up in here. Now, I know that I'm speaking quickly, and for some of you guys, you're probably a little bit newer in the market or whatever. You will have this video. You will be able to go back and listen to this stuff. Make sure that you do that before you implement this trade, right? Before you do anything with the trade. Actually, before you do anything with the market at all, there are some concepts that I've covered here, even in this last 30 minutes, that are so important, and I wish I had those concepts when I started. But unfortunately, in this space, most people don't talk about this stuff. They'd rather talk about some indicator that really doesn't make any difference because it's lagging and it's not giving you any information that's of value, right? Or some indicator that they invented that gives you the green flag when you buy and the red flag when you sell. It's like, the most ridiculous thing. However, if you can just learn these concepts, because I guarantee you an institutional buyer or seller isn't going to have a green flag when it's time to buy. They don't have some weird moving average cross that's going to tell them when to buy. They're going to know what their zone is. They're going to know what their area is to buy something, right? So we want to trade like the people that can move the market so that we can follow them when they are moving the market. Now, if we don't have any understanding of that, then we're always behind. People go, the trend is your friend. I talk about this all the time. It's true, the trend is your friend. Okay, you have the up move, the down move, the up move. Okay, I can see the trend developing. Now, all of a sudden, based on old tired teaching in this space of the market, people would start trying to buy here because now they're seeing multiple higher lows and higher highs. And so by the time the amateur recognizes an uptrend, then you get that nasty little pullback that stops everybody out before it resumes. How many times you get into something and then it stops you out right before it takes off on you? Especially if you're in your first 6 months to a year of trading. Anybody admit to that? I'm not going to say your name or anything. Anybody ever happened to you where you get into something, you're like, oh, finally I got the uptrend, and then you get in and you go, how in the world did I get stopped out right before it went? How many people get stopped out right before it goes, and you feel like you miss it and you chase it again, whatever, right? The problem is you need to be able to recognize these trends early. And if you don't recognize the trend turns early because you understand supply and demand to the left, then you're always coming into these trends late. And so the trend, they go, the trend is your friend until the end. Well, I mean, the trend is nobody's friend because people always get in at the end, right? At least the end enough before the pullback, then they get stopped out, then it runs again. So that to help me look for this specific setup, I have the secretary. Maybe that'll go to everybody. I'm not too sure. Renee, maybe you can put that in the thing for everybody. I don't know if I can do. Maybe I can. So here's the link. So this is my secretary. So there was a day when I used to run through charts, and I would click through a bunch of charts, and I'd look for high-low tickers and new highs and new lows, and go through a bunch of different things. And probably I spent 60-70% of my day looking through stocks that really never should have made it to my screen. It was kind of, I don't want to say stressful, but it just took so much of my time and effort. But now I have a scanner that I have set up to look for things for me. This, and this. These 4 windows right here look for exactly this setup that I'm talking about today. And when something pops up here, it's of super high quality. So I'm going to spit out 3,000 things today. This is the screen that, for these screens, you'll see things, but if you look at the time, right? On these, they disappear, so it's great. You get 1 or 2 at a time. For these, they keep them on all day long, so that's why there's a lot. But so this is my secretary. It's going through the market and looking through thousands of stocks that meet my criteria. If it meets my criteria, then I am able to take a look on my chart and see if the if-then plan is coming to fruition. All right. I no longer need to look through a million things in my day. I can just sit back and wait for my secretary to pop up my ideas. And so all of these charts that you're about to see now, for the next 10 or 15 minutes, these are all charts that came into my scanner here, and I was able to quickly pull it up and be in front of a great opportunity immediately. Right. So more information on the scanner right there. And if you want to get involved, oh, by the way, if you get that scanner, it's not mine. I just it's just what I use. But if you get that scanner and you want this layout, you would just then email me afterwards, and I'd be happy to send that to you. Actually, let me put the email address up here. All right. All right, let's look at some charts. This is the fun stuff. So remember, we're talking about multiple. This is a daily chart. Now remember, it doesn't matter what the stock is, right? Doesn't even matter what the price of the stock is. Those are not important criteria. The important criteria was that if you have multiple days down into an area of support, then that would be good. Now, for some people, they would say, oh, here's my line. Okay, this is support. If I break below that, then it's game over, right? That's how people draw support and resistance, right? So they have that line right there. Unfortunately, this gets broken. There's volatility that day for whatever reason. This thing gets broken, and so we're amateurs are completely freaking out. They're just like, panic, right? Whatever. That's exactly when the pros are stepping in. I mean, people going, this is so bearish. Like, I don't ever want to buy this ever again. And that's when the pros step in and buy it again. Because what happened the last time we were here? at this resistance, 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 like massive bars breaking through that resistance level. A pullback, right? I mean, this is another setup we teach. A pullback to the same area and right? The explosive move away from that tells me that this zone, maybe not that big, maybe a little smaller, but you get the point, right? That zone down here is a very good value area where market participants that actually matter were able to move it quickly away from here. This is a great buy zone. So instead of panicking down here, you're looking for a great buy setup. So if this pulls in with multiple bars into this area, then I can look for a setup. Remember the if-then plan. If you never have an if-then plan, then you're just kind of a mess. No, I don't care. By the way, let me talk about the moving averages, because people are going to talk about moving averages because the old and tired way of teaching. The only reason I have moving averages on my chart is because it's a quick snapshot. So oftentimes I keep my chart. So if my daily chart is this big on my windows. So on my multiple time frame, this is all of my daily chart that I see. Now, if I want a bigger view, I quickly open it up to full window and then I go back. So why do I keep the moving averages? Because at a snapshot, I know that over the last 200 closes, I have been moving up. So this has been an uptrending chart. So for longer term buyers and people that actually make a difference in the market, this has been an uptrending chart. Now in the very short term, the 20 last closes and the 50 last closes. It's just a snapshot of more or less where this has been. I don't need to look to the left. I just know how moving averages work. Moving averages will never give me an entry, will never give me an exit, will never give me some sort of signal. It's just a snapshot of where it's been, so that I don't have to open the chart every single time to know that over the last 200 closes, we've been making higher prices. Over the last 20 closes, over the last 50 closes. That's how I use moving averages. It's just a snapshot, right? So I get into multiple days down, this really beautiful area on the weekly chart. Obviously, if this would be a weekly chart, you could see the the spike here, the jump here, or the daily chart, right? I got this beautiful area. Then I go down to my hourly and so on and so forth. Here's my hourly candle. Look at this hourly candle. Massive, opens at the high, spikes down into that zone down there. Here's a 5-minute chart, right? You want multiple bars on the way down. You get the spike in volume, and you can see on the time on an entry time frame, the small time frame. You see the spike down. You see look at the volume, and so immediately, whoop. Now, if you don't take that trade, again, we're talking about the if this happens, then you can look for a trade. Now, there are different ways to get into this trade. And there's probably 3 or 4 different setups right here that I recognize that are in my plan. Now you have to figure out what your entry plan is. Maybe it's the higher low. Okay, so this is the low, this is the higher low on this pullback. Maybe you enter there. I don't know. Maybe on this volatility you have a way to get in. Maybe it's over this can. How you get in is going to be probably a different course altogether. But just being able to recognize this and going, oh my gosh, here's a really high probability event. I am going to at least get some sort of bounce here. Does it mean that because this happened, you're going to get a V-shaped reversal and you can bank on getting in here and getting out a higher day? That is not what I'm saying at all. What I am saying is that there's a high probability event here and you can get at least some bounce. And remember, we're talking about 20, 30, 40 cents, right? If you can get that, I'll highlight this so you can see here's more than 30 cents and this thing is, was still not all the way up there. More examples. More example. Here's another one, right? Oh, by the way, on that last daily chart, let me go back real fast. Right? Remember, if we can break a major area, we broke that major area, really nice, even better. Even might have broken that just a little bit, right? Okay, let me go. New one, okay? Multiple bars down, boom, 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 boom. We come into this area. We actually even broke it by a few pennies. I remember that day very, very clearly, right? I loved it. When we broke this level by a few pennies, I loved it, right? It makes me go, I like this trade too. I love this trade. When most amateurs will lose interest and walk away. Even if they're not involved with the trade, they go, oh, it broke support. I'm not interested anymore. Big money doesn't want you to be interested if they're going to move it back up. They don't want you to buy it. They want to buy it. They want to buy every share available at that price. They don't want you to buy it, so they're going to find every way that they can make you uninterested, right? If you're uninterested, you're not buying it, they are buying it, they get more shares. They get more shares, they get to bounce more of them. And here's the hourly chart. It was this day right here, multiple hourly candles through several levels of support. Here's a spike on the small time frame, right? Whoop. Look at the volume here. Highest volume of the day at 1:30 p.m. And you see what ensues after that. Right? Even on the 5-minute chart, multiple 5-minute charts, boom. Okay. This making sense, everybody? I hope it's making sense. And here's another one, multiple bars down, massive bar down into an area where resistance, 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 whoop, we broke right out of there. And there you go, right? I mean, 60 minute, 60 minute, 60 minute, right? And then you get that spike. Do you have to be married to this? Do you want to keep this on the chart forever? No, 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 no. This is, a few minutes trade. This is a 2-minute chart. This probably pays you within 10 minutes, you've made several $100s and you're out of here, depending on your risk parameters. We like to trade, 1,000 or more shares on each one of these trades. And so, $200, $300, $400 on a trade. By the way, if you make $400 a day, you're a 6-figure income trader, right? That's our goal. Here's one that's not multiple days. It's only like 2 green days. But the reason I like it, look at the size of this candle. If you talk about average true range, like, what are these candles? Let's say these candles, I'm not going to count, but let's say these candles are 50 cents, 60 cents. What is this? Like 8 times its average, something like that. So as this thing was running up, I'm going, oh, I'm starting to salivate, thinking if I can just get to $60, where the supply zone is. This is all a zone where it's been sold before and fell off from. If I can just run up from $56 to $60, 4 points on this thing, if I can just run up there, I'm gonna get a pretty decent sell setup. This was one that was just glorious. Now we have a very, there's a very specific trade setup. We call it a hook that we teach. That's the then, right? The if was if I can get it to come to 60. The then would be, my goodness, then I have to have a setup that allows me in this thing. This was probably the fastest winner that we've had this year in 2017. I mean, it was at $60, and this is a 2-minute chart. Within 4 minutes, this was. Do you see this? Do not expect this on a regular basis. This was a gift. I mean, this thing was down $2 in 4 minutes, right? I'm not going to sit here and tell you this is what you're going to get every day, even though some other people might tell you that that's the norm. This is not the norm, but this is a beauty. If it comes into 60, then you can look for a setup. And if the then matches your plan, how do you not take that? Now you can expect to come here. That's fine. Pull profits all the way along the way. If you can get all the way through VWAP, gift. You with me? Got 5 minutes left, so I got a little faster. Right? Multiple bars down. My goodness, it breaks the daily pivot here. And then it comes into this massive bar that, let's say we had let's say we had a downtrend here. Obviously, this bar breaks the downtrend. Right? You see 200 closes, 50 closes. I don't need to go back in the chart to know what the chart looked to the left. This is 20 closes, 50 closes, 200 closes. So we're slightly moving down. Clearly, we broke that trend with a massive bar, and we got away from that area very quickly. If I can get multiple bars down on the daily chart to come into that, woo! Salivating, excited to get that trade off. And here's the 5-minute chart, 1, 2, 3, 4. Big hourly on the way down. Spike in volume, off to the races. Thank you. I got the 5-minute, thank you. So another one here, red day, gap down. People don't consider this a red day, but you realize that this isn't magic or mystical movement. Somebody shorted that in there, right? People sold that in there too. So multiple days down, boop, into an area of support, and there it goes. Now, these are all trades from the room, by the way, and multiple bars down. And now we talked about a little bit of failed buy setup. So this thing was going down, going down, going down. They had a buy setup here that failed. When you run up, your most obvious level of resistance and your at least first target needs to be where people are stuck. So any run up into that area, need to peel profit and then allow it to pull back and see if it'll go again. That's another simple point right there, how to find targets on a chart. All right. There's a couple more, but I don't want to run long. I'll go real fast. So red bar, spike down, breaks through that daily right there. Ah, glorious, right? Breaks by a few pennies, comes into the whole number 33. Just so money. And the spike is incredible, right? Whoop and whoop all the way up. Just crazy. Again, it's not about making $1 million. It's about being in front of an opportunity. This is an if-then plan, right? If that comes into that area with those rules that we have, then I can expect a high probability trade. All right. This makes sense, everybody? I was hoping we'd have more time for questions, but these 45 minutes go by so fast and there's so much to cover. If you're one of the first 5 people that wants to just kind of check out the room, we have an active trading room where we talk about these types of trades on a regular basis. You can take $100 off your first month just for the first 5 people, then that coupon will expire. So that's kind of the offer. There's no but wait, and then you get this and you get free that, and we have great massive value in the room. So there it is. I can take maybe 2 questions, 3 questions. It's like 3 minutes left. I was hoping to have a bunch of time for questions, but I can show you BBY today, right? This is clearly more than its average true range, right? So we were looking for potential shorts, but the problem is this is day 1, right? We talked about day 1 not being ideal, right? Because you have red day. We had this pause. We talked about breakouts, bases before breakouts not being ideal places, right? So this thing started to run, and I had 1 or 2 shorts in here, but they were very quick. I can't expect this to roll over because it's day 1. Day 1, not ideal for these things. So, okay, one of the questions says, seems like you need to watch a lot of charts. How would you juggle 10 trades? I do not watch a lot of charts. I have my secretary. I don't watch a lot of charts at all. Like I said earlier in the presentation, I have this. That's it. I watch this on one of my screens, and then 2 of my other screens will have charts up. I don't watch a million things. If it pops in here, or it pops in here, or it pops in here, and it pops in here, then I will click on it. It'll populate on my chart, and I can make a decision in a minute or 2. Maybe it's something I can keep watching. Maybe it's complete garbage and I walk away. So it's not about watching a million charts. I don't have time for that. I trade one thing at a time. If I'm completely safe and I've made money on that trade, then I'll move into the second one. But I don't trade a lot of things at the same time because, again, I want to have quite a bit of size and get paid. I don't want to trade 100 shares. I don't want to trade 500 shares. Now you can if you're starting, but I mean, I want to trade 1,000, 2,000 shares, get paid in 20, 30 cents, 4 minutes, 5 minutes, be done, and then just leave the back of the position to pay me more. And the scanner, you can find the scanner at this link here, fiercetrading.com/scanner. I put that in the chat. My time is up. Thank you, everybody. Thank you, Renee. I hope that this was super helpful. Come visit us at fiercetrading.com. Myself and my business partner would love to catch up with you and see if we can help you. Take care, everybody.